Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, June 28, 2013, and we're looking at 21 major markets that we track for you at PerfectStockAlert.com. Remember, a free website. You can check out these charts. My personal charts are updated and annotated every single night on the website, so you can watch them whenever you like, or check them out whenever you like. But on Fridays, I like to go over all of them so that you guys know everything that I know moving into the week ahead. I covered the 10-year Treasury note yield, TNX, yesterday in pretty good detail, so I'm not going to really say anything new today. I'm definitely not going to repeat myself either. So if you want more information on this chart, simply watch yesterday's video. Regarding today's low point down here on this candlestick, this could be a bad print. I haven't actually gone and looked at the news. I was goofing off today. So I'm going to reserve my opinion on this. This is just, if this were real, then we'd see an increase of volatility here. And again, the chart still is very, very bullish, and so I want to stay with that bullish uptrend and expect that's going to continue to cause problems for stock markets globally as yields rise. Quick glance here at the AORD, Australia's markets. You can see a very bearish condition happening here. We've obviously broken down. We talked about what was happening. Told you the opportunity was to sell. Sell signal here was a nice one here off the top. And then we've broken that support. It was acting as support here and here. And so now we're going to see that as acting as resistance. Also, whenever you're in a bearish market or a downtrend, you will see resistance at the 50-period moving average. And you can see that that is right in line, just about in line with that point as well. Right now we have a lower low than we've seen over here, so we have this still in the downtrend, lower series of highs, lower series of lows. We do have the potential in this particular scenario, though, to continue to move up here and do this, and then come down here and play around, and then we could break down, we could turn into a bull market, we could do other things. But again, at this point in time, that's where I'd be finding resistance at that point. So the upside here is very limited. We do have a sell signal as of today, and again, that can be a problem if you're bullish. I'm not bullish. I'm not trying to buy this. I'm not trying to trade the bounce. I'm staying short, but my stop is set right here for now. If I get stopped out, I'll watch for another entry opportunity, and then if we come down here and break down and continue to go lower, that's great. But if we start to find support or something like that, then I'll close that position and look at it from a long perspective, because at that point in time you might have this high point here, a higher high here, low point here, and a higher high, a higher low here, and we'll be trending up at that point in time. We'll keep an eye on it and see what happens, but right now there's just nothing clear that you could trade on the long side. Quick glance here at the Dow Jones Industrial Average. This one we called perfectly. I really liked this activity. We talked about the bounce potential here. Told you I wouldn't be trusting it. It wasn't confirmed as a true bottom by the transportation average, and so we'll show that in a moment. But this bounce here made sense. But we told you after you had broken this support, we'd seen support at the 50 period here, which is typical in a bull market. You find support at the 50. When you close below that 50 period moving average, then you start to see that change, and you see support, where previous support was, starts to act as resistance, which you saw here. So again, my stop is way up here. I've given it plenty of room to goof around and do whatever in a low volume holiday weekend, but or holiday week, but this is still very bearish right now. You have this high point here, down to the low, and we bounce around goofing off here, and then we make just lower series of highs, lower series of lows right now. Nothing to do with this but sell it. One more item to note regarding this chart, and you'll see it repeated on many of the charts we look at. The ultimate oscillator, when it's peaking out at the 60 line, like you're seeing here, here, and even here, that's bear market territory. That's what that's indicating to you. The upward momentum is very, very weak, and downward momentum is stronger. That's why you're able to go lower than you had gone before. You see. Quick glance here at the trend, the Dow Jones Transportation Average Index, and then this one obviously is doing the exact same thing. You get this low, high point to the low, and a bounce here. It didn't give us anything but a dead cat bounce. You got the sell signal here, beautiful situation, confirmation the next day. Obviously you get short here, the tight stop set here, and she breaks to the downside. We told you that was going to happen before it did, because there's no hammer candlestick formation off this low point here. That means when it's tested, it will fail. Same thing can be said here. You've got a bounce here, you get the sell signal, you wait for confirmation, you take it, and you look for this to break and come down here and take out the low. And again, we're taking this level here, okay? The main thing here, again, would be you close below the 50-period moving average, and then you do it again with more vigor. You can see you move lower than you had before, and now you've bounced up to it, getting sell signals underneath it. The best short opportunities in a bear market, in a downtrend, is at the 50-period moving average or above it, like you see here or here. Quick glance here at the French CAC 40 index, same basic overall story, a little bit more play room in this one. I can see at the upside we have an unfilled gap here that could still get filled, and again we're still trading well below the 50 period moving average. However, you could also just as easily roll over here and just continue to move lower. It's not something that I'm willing to bet that we're going to rally up here and fill this gap. That's why I told you I wouldn't do that. You also have a gap down here that's unfilled, so just look at a gap and say, well, I'm going to buy because the gap's going to fill. That's a bad idea. Look at this chart. You can see the high point, the low, closing below the 50 period moving average, this red line right here, and then we come down and we play around at it for a little bit. It goes down here and we come up, test it, and we fail. We see resistance there and we go lower quickly. Now again, no hammer candlestick formation, and we've taken out the previous low. So this is not even in support right here. This used to be support. It's not really. It's just pretending to be for a moment, and then we'll come down here, bounce up here. You can do either roll over at this point and continue to go lower, or you can bounce up again and test that previous high and then go lower. Again, I want to point out the same overall facts. That you look at the momentum indication there, obviously a much weaker, and you can see that it's indicating a bear market territory. Quick glance here at the MIB, the Milan Index. You can see the same basic overall story. All we've seen here is a big, massive rollover of the markets, and that's important. And again, note that you did not hold support. You took them out, pierced them, and then closed below them, and then you get a little bounce here. It doesn't matter. You're not really got a support here, and you're going to reverse and go lower again. The main thing to show you here, again, would be what we talked about before. When you have these, the 50 period moving average contracting, coming closer and closer to the 200 period moving average, when they cross, everybody will realize, oh, you're in a bear market. But again, you already can spot that for yourself. Quick glance here at the German DAX composite, the same basic overall chart formation, same basic overall story. We had this breakdown here, and we started closing below the 50 period moving average. Then we got this massive rally as everybody started stimulating everything they could possibly stimulate. And then down we go, we just simply erase it. Now we have no hammer candlestick formation off the low. We've got a bounce here. We're going to find resistance at the 50 period moving average. Again, note the 60 line here on the ultimate oscillator indicating bear market territory. Now you can either roll over at this point now, or you can come up here and test the previous, and it won't really matter. The end result will still be a move lower. Take out this low and test this low down here. Okay, quick glance here at gold. We've been bearish on gold for a while, and this is coming to an end here. We expect it will get stopped out probably in short order. We've already been stopped on the silver chart. And you can see here you had this first leg to the downside. We warned when that happened. There was no hammer candlestick formation here. This is just the first leg, and then you're going to have the measured move, which is all this bounce was. You look for sell opportunities, opportunity to get short. Notice the difference between the black arrow indicates sell signal, but a blue arrow indicates confirmation, and then the stop would be set here, and we continue to watch it fall apart, and then we advance the stop as necessary. The stop should be now really tight. You should be locking in all these gains and waiting for you to get kicked out, and maybe get another opportunity to short it, because again, there's no hammer candlestick formation here, so you could see a bounce up here near the 20 SMA or the middle Bollinger Band line. You can see that it finds resistance there repeatedly. A lot of guys, again, still want to be long gold. Don't. Just wait. If you are a bullish chart, you will be able to close above the 50 period moving average. If you cannot do that, you are not bullish, and there's no sense in trying to buy it. Quick glance here at the Hong Kong Hang Seng Index. This one we made lots of money on the downside, and that one advanced the stop, anticipating the big bounce. You got the bounce, and it's still going 4 consecutive days. Note again, the black arrow indicates the sell signal has been given, but it doesn't mean you sell. You wait for confirmation, and then you've had 4 days to the upside. Fine, let it run, let it do whatever it wants to do. As long as the trend stays to the downside, high point, lower high, lower low, lower high, lower low, lower high thus far, and we'll keep an eye on it. Even if you break out, do not buy it. Wait for the pullback to test the low. At that point, you could say, all right, we have a high point here, higher high here, low point here, higher low there. I'm going to start to trade it to the upside. At that point, you can start thinking that way. Right now, you don't have anything to do. I would actually still consider a short of this position, even if we took out the previous high. For example, if we saw this situation here form like this, I would still take a short if I found a sell signal here, because we have never tested this low. So regardless, we would have to, and that would be a pullback here. I can make money on my short. If we started to get some support signs, some hammers, something of that nature, then I could say, okay, wait a minute, we probably got some kind of reversal happening here, or something of that nature, and I cover the short and go long. Right now, you still have a very bearish condition, and again, I want to point out this support here is no longer support. It's now going to be acting as resistance, so that's about in line. Actually, that's sloped a little bit. It should be like that. That's about in line with a move up here, test the previous level. If we get resistance here and a lower high, it's an easy short to the downside. Quick glance here at the India Bombay Stock Exchange. Nice move to the upside, and we've been stopped out of this position that we had short because we had this high point, lower high, lower low, lower high, lower low. We just keep advancing the stops until eventually we get stopped out. That's fine. Now wait and see what happens. Again, no hammer candlestick formation off the bottom. Well, you can do all kinds of things here. You got a gap down here, lots of filling that has to take place. Another one here. Let this thing set up, and if it gives you a sell signal, we'll take advantage of that and see where we go with that. If you're going to be bullish, you need to see everything change. You need to see a series of higher highs and higher lows, and then a trend. It's giving you something you can work with. Quick glance here at the Japan iShares. This one's designed to track the Nikkei, though it doesn't track it as close as I'd like it to. Regardless, you do have a sell signal today, and again, we're already short with a tight stop set up here, just above that 50-period moving average, where we should start to find some resistance. This would be a good entry point if the trend continues to be down. We'll keep an eye on it right now. The main thing here, like I've been saying, all I see here is the same thing we saw in gold at the early stages. The big move to the downside, the measured move. We will simply duplicate this move here out the other side when we break. So that's important to keep an eye on. That's why I'm looking at sell signals here. Quick glance here at the FTSE, London Financial Times Index. You can see the same basic overall chart pattern here and then here. I simply erased everything. And you'll notice this support here and here. And you see that we draw that line out there. And you can see you pierced it, which is warning, like we told you when it happened. That's warning that you're about to break it. You get the bounce. It doesn't make a difference. You're going to come down here and take it out. And that's exactly what happened. Now you bounced up again to it. And what was acting as support is now acting as resistance. You get a sell signal today. It makes a lot of sense. You could still, even though you have the sell signal and resistance, you could still come up here and do this and then get another one and go lower. Okay. Let me clean that up right quick. You can see the main point to be drawn here is that you do not have a hammer candlestick formation here at this low. Ergo, it's not going to hold when it's tested. Quick glance here at the NASDAQ, and you can see the U.S. markets have lagged the sellout that we're seeing globally. So for the global markets, you've seen more of a very clearly defined up and then back down to erase it all. But in the U.S., we haven't done that as dramatically. We've come down here, close below the 50, bounced up to it, finding some resistance, some sell signals here at this point, and that makes sense as well for the bearish turn of the market. And again, and look at the 60 line here on the ultimate oscillator, indicating the same thing from a momentum perspective. And I've already talked about this. You do have a gap above, which you can come up here and fill. That'd be fine. But you do have more gaps below you. One here, one here, one here, one here. There's several. Actually, there's another one here, and there's several that you can't even see on this chart anymore. So again, I'd be looking for this to come down here, test this level ultimately, and then again, no hammer candlestick formation. It will break down. Same thing we told you back here. Quick glance here at the XOI oil index. This one obviously tracking the global markets, because if markets are going to be rolling over and you're going to be seeing weaker economic conditions, then why would you sell more oil? You wouldn't. You'd sell less. So that's what's going on here. You can see this bounce here. Again, sell signal forms, and you got confirmation as of today. All we see here is a downtrend in form, different situation, but it's still doing the exact same thing. It's rolling over. You could actually take a position here, because that's what the marks are indicating here, the chart. But the stop we have is still set up here. This could be advanced to this point here and lock in more gain. Quick glance here at the UUP, the U.S. Bullish Dollar Index Fund. You can see that it's got all kinds of places. It's very sporadic. Low point, lower low here. High point, higher high, and then you've got middle ground. You're basically just kind of moving sideways in this really wild pattern. That's fine. It does whatever it wants to do. We've been stopped out here. We saw the signal here. Didn't get confirmation. It continued to rally. That's fine. The main thing here, this rally, you note the high close from this point here, and then this point and this point here. Then follow it up here. You can see that you are doing something completely different on the ultimate oscillator. You are basically flatline there. So this would be a bearish divergence, not sustainable. If I come up here and I get a sell signal, something of that nature, especially at the near future, which about this level, I have a problem, or you would have a problem if you're bullish this chart, and that would be that you have this formation here, here, and here, which would look like a very massive negative looking head and shoulders formation. So you would see that your neckline would be negative slope from this point here to this point here, massive. That would mean if you came back down here and closed below the neckline, you would measure this distance out from the high to the neckline, measure that out mathematically, and subtract it from break below the neckline. You would have so much further to fall. It would be really, really big move to the downside. So that's something to watch. Again, a massive gap down here would suggest a fill, but there's a lot of things that could develop here, so I'm not going to go and say that's exactly what's going to happen, but keep an eye on it. The Russell 2000 Small Cap Index, same basic overall chart that we've been seeing in the U.S. This move here, and then we start to slowly erase it with lots of fight back and forth between bulls and bears. Not sure what's going on, but the overall trend is down. You do have a bounce here. It doesn't make a bit of difference. Our stop is up here. You have to take this level out if you want to try to convince bears that their timing's off or something of that nature. Right now, you don't even have that. I could mark a sell signal here if I wanted to, but we haven't got confirmation here anyway. The main thing here, again, ultimate oscillator indicating bear market as of the peak, and so that's important to note. You are in a very weak market, and I wouldn't be a buyer of this. Again, if you're trying to buy these markets, pay attention to what's happening here. You're taking out lows. See this previous low point here or here? It's been taken out. That can only happen when buyers are backing away and sellers are stronger. So why would you buy into that environment? You don't want that. You want it to change in a bullish condition. I would like to repeat, you still can come up here and fill this gap in here. However, that's not enough reason for me to go buy. You have gaps below you as well, here, as well as here, here, here. That's just, if you were just looking at gap analysis, you'd have to bet on the downward fill. Looking now at the S&P 500 Large Cap Index, you can see the same basic overall chart formation, the same basic overall tell. You can see that we're acting as support at the 50 period when you were in a bullish uptrend here, here, and here, and then that changed. You closed below the 50. That means that support should now be acting as resistance, which is what you're seeing here. So you had this bounce, you here test it, you get a sell signal, you get confirmation the next period. My stop is still set here because we can still play around at this level and bounce around. We have a gap hit, it could come up and fill, things of that nature. But I would still expect we're going to come down here and test this level, ultimately test this level here, and I do not believe it will hold because there's no hammer candlestick formation at this point. By now you should be catching on that what we're really seeing happen in the U.S. is the same thing we've happened in Europe and Hong Kong Hang Seng Index and things like that. You just simply saw this rally get erased, and then we broke that and we started to go lower. Quick glance here at silver. It is over. You've been stopped out. Congratulations. You've made lots of money on that trade. Remember, same story. First leg to the downside, measured move, the bounce that followed. This is the same thing that I see developing on the Nikkei chart. So again, a lot of people thought this is the bottom because surely it wasn't going to be able to just continue to go like this forever, and it doesn't. You do get bounces along the way. No market moves straight down, but again, no hammer candlestick formation, not a true bottom. Eventually, you get this duplicated out the other side. Quick glance here at the Toronto Stock Exchange, TSX, the same basic overall story. On this one's more bearish. Previous high was higher than this one here, so we saw this one come up here after breaking down. Note to close below the 50, so forth and so on. We come down here, get a sell signal at the 200 period moving average, very important. When you get this big test at the previous high, you fail, you get a sell signal, and you just roll over and erase the entire thing. That's all you're going to do here. Now, think about it. You've come down to this point here, and you've run up here and tested and failed. Now you've come down to that point again. Are you going to run up here and test it again? No, because you know you can't beat it. You've already tried that over here. So what's actually happened is this short-term little bounce here. You can pause out at the 20 period moving average or the middle Bollinger Band line, or you can actually come up here and test the previous at the 50 period moving average and find resistance there. Either way, it's still an overall downtrend and lower highs, lower lows. Our stop is out the previous high point. Quick glance at the VIX, or the Volatility Index, which runs the inverse, the opposite of the S&P 500. Whenever you have the hedge fund managers, the smart money's out there, and they're watching their markets and their long positions. If they start to get cautious, they'll start to go out and buy options to protect themselves, and that will drive up the VIX. That's what's being reflected there. And so you can see they are cautious here. They are very concerned, and they should be. Looking at the VIX, you can see that you have this uptrend going on. It's been going on for a while here, and this is basically just the opposite of what you're going to be seeing in the S&P 500. So the fact that you have a pullback here, that's normal, and you should expect to find support at the previous level. That's exactly what you're finding. A higher low than you've seen before. Our stop is set here. Finding support at the 50 period moving average. All bullish conditions for the VIX, which will translate into all bearish conditions for the S&P 500. Look for a test of this high. Looking now at the Wilshire 4500, the EMW, you can see the same basic overall U.S. market story happened here. High point here, comes down, sell signal, and she breaks down lower series of highs, lower series of lows from this point here, and we just start to do the exact same thing. Holding this support here at the 50, we talked about that when it was going on. Told you if you once you broke below that point, it was over. That support would now be acting as resistance, which is where you're finding it point here. Our stop is still set off the high, but again, we see no strength here, no reason to be long. Look for a test of this low here, and then a test of this low here. Again, no hammer candlestick formation, you will take it out. Quick little announcement. For most of the week, we've got trade signals here that we're posting every day, so be sure to check those out. A lot of stuff you can learn just looking at individual charts that we analyze for you guys there on a nightly basis, but we only post them on the free website, so you got to go there to check them out. I'd like to tell you guys thank you very much for your support. Remember, it's a 100% free website. All we ask in return, please refer a friend. Enjoy your holiday. If you're taking the whole week off, cool. And if you're going traveling with family or drinking or whatever, be safe, and I will see you all on Monday. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.